Hey Facebook, Jerry Heiderscheit, 1 Minute Mortgage Pro. Did you know that credit cards make up about 30% of your credit score? And there's other dynamics to your credit score that they actually play part in. Arguably, they make up over half of your credit score. There's actually four different things that the credit bureaus really look at when judging your credit based off of a credit card. They have such a high impact, and I'll go over those four things in a second, but they have such a high impact because that is the closest thing that they have to judging how you manage your money. If you think about it, if I could look into your bank account and I could see how much money you make, what you spend it on, how much money you keep in there, what your investments are, I would know you a lot better. I don't have that ability, but if I could look at how you manage your credit cards, that's almost just as good. So if they gave you $1,000 limit credit card and you maxed it out right away, or at all for that matter, it looks like you don't manage your money well and that you needed the money. So they lower your credit score accordingly. So credit cards are judged a little bit more aggressively than installment loans, mortgages, auto loans, and things like that. So there's a couple things they look at. One, are you actually using the card? Usage, I think that's 10%. So you got to actually make sure you're using the cards. If they just sit around, they're not helping you. Two, are you actually making payments on time? That's huge. Late payments will haunt you for years. Three, are you making at least the minimum down payment or the minimum monthly payment? So if your minimum payment is $25 and you make a $40 payment, you're making more than the minimum. That's beneficial. That actually helps you. As of August of last year, they made some changes and they're actually tracking to see how much more you pay over the minimum. It looks like, again, like you manage your money well. And then the fourth thing, and this is the big one that everybody overlooks, is how much of the limit are you using? The goal is to stay under 30%. I tell everybody 25% to build in that cushion. There's tiers. Between 0 and 10% is best. Between 10 and 30% is good. Over 30%, even if your payments are on time, is actually going to hurt your credit. So if you're trying to get your credit score where it needs to be so you can get a home loan, one, you're probably going to need credit cards, even though that's kind of like that cliche bad advice, go get a credit card. You're probably going to need a credit card. Two, you're going to need to use it. Three, you're going to need to make payments on time and at least the minimum. And four, keep the balance low. Keep it very low, preferably under 10%. So if it's a $300 card, don't go over, say $30. Definitely don't go over $100. You want to stay under 30% no matter what. Keep that in mind. Build your credit, pay down the cards. It's a quick way to get your score to come up. See you guys.